In today's video, I'll be going over how to pay off your mortgage faster by using 3 key strategies. Welcome back, guys. It's Tom here from Moffett Mortgages. Thanks again for tuning in, and as always, please feel free to like the video down below and hit that subscribe button, hit that notification bell as well. That way you don't miss videos like this in the future. Now, there's definitely a big attraction when it comes to paying off your mortgage fully. Now, it obviously leaves that warm, fuzzy feeling, not having that mortgage payment, being essentially debt-free. That's a big chunk of payments that you're not making every month. Well, make sure you watch till the end because I do have an opinion on this and it may not be what you think. So let's dive into the 3 key strategies on how to pay off that mortgage completely, starting off with number 1, prepayment privileges. So prepayment privileges work in the sense that it's a feature within your mortgage that you can utilize to essentially pay down your mortgage throughout the life of your amortization. So it's important to know that prepayment privileges are different within each mortgage product. So for example, you might be with a lender that has a 15% prepayment privilege, whereas someone else may be with another lender that offers only 10%. So what do these percentages mean? So let's say you have a 15% prepayment privilege with your lender. That means you can either A, put up to 15% of your total mortgage amount annually. So you can put up to 15% of that total mortgage amount towards your mortgage as cash paid down towards your mortgage. Or B, you can increase your monthly payment by 15%. Or whatever payment you have, let's say you have biweekly payments, you can increase those payments by 15%. Now, most mortgages will allow up to a 10 to 20% prepayment privilege. So one real good way of paying down that mortgage is by increasing your payment year after year. So let's say, again, you have that 15% prepayment privilege. You can use that and increase your payment by 15% year after year. So it's important to note that some lenders have specifics on when you can make those lump sum payments. So let's say, for example, you want to take advantage of the lump sum payments and you want to toss down $20,000 towards your mortgage. Well, some lenders will say you could only do that on your mortgage anniversary, whereas some other lenders will allow you to do that at any point during the term. So as an example, using the lump sum payments, let's say your mortgage amount is $500,000 and we're going back to that 15% prepayment privilege that your mortgage has. Well, you can put up to $75,000 towards your mortgage year after year. So that's your lump sum payments. So to give you an example of how powerful lump sum payments can be, let's say your lender gives you 20% prepayment privileges. So to give you an example, I'm going to look at my phone here because I can't remember these numbers. Let's say you use those 20% prepayment privileges annually. You can knock down your mortgage in 4.2 years using 20% lump sum payments. That's going back to the $500,000 mortgage. Now let's say you have 10% prepayment privileges. You can knock down your mortgage in 7.2 years. And even as low as 5% prepayment privileges, you can knock down your mortgage in 11 years. Now let's go even lower. Let's say you only want to make 2.5% lump sum payments. You can knock down your mortgage in 15 years. So you can see how effective this lump sum payment feature is, even as putting down as low as 2.5%. So now that we've covered strategy number 1 with prepayment privileges, let's go on to strategy number 2, payment frequency. So the payment frequency is how it sounds. When you sign up for a mortgage, you have the option to choose different frequencies. So for example, if you wanted weekly payments, you can pick weekly, bi-weekly, semi-monthly, monthly. You get the idea. Most people do go with the monthly payment, but it's important to note that you do have options when it comes to your payment frequency, especially when it comes to paying off your mortgage faster. So if you did want to pay off your mortgage faster, an option you can do is pick bi-weekly or weekly accelerated payments. So the difference between a regular and an accelerated payment really comes down to, if you have an accelerated payment, you're essentially paying more per payment. So there's not much of a difference when you really break it down. So let's give an example of a $500,000 mortgage. With that, your biweekly payments, this is regular biweekly, you're gonna be paying $976, and an accelerated biweekly, you're paying $1,058. So you can see there's not a huge difference, not a huge spread there between the regular and the accelerated. So when that happens, when you're paying accelerated payments, you're essentially knocking down your mortgage by 3 to 4 years right out of the gate. The nice part about accelerated payments is that it's kind of like paying down your mortgage on autopilot. You set it and forget it. So now that we have strategy 1 and 2, let's go on to strategy number 3. Get in more debt. Yes, I know you're probably looking at me sideways. Why are you going to get in more debt, and how is that going to help pay down that mortgage? Strategy number 3 is my personal favorite. I do it on a somewhat regular basis. I'm constantly investing, and me specifically, I'm investing in real estate because I believe in investing in appreciating assets. So for strategy number 3, accumulating debt, we're not talking about maxing out your credit cards or your line of credits or buying a boat, buying a car. We're talking about investing in things that's actually going to help you down the line in the future. So by leveraging yourself and investing in real estate allows you the opportunity to pay off that mortgage a lot faster. And the way you do it is, let's say you bought 1 to 2 rental properties over the next 5 or 10 years. Well, you can count on that property appreciating over time. Now, as a real estate investor, you never really bank on the appreciation. You must make sure that the property itself is cash flowing, and that's a whole nother discussion, another conversation. But let's just say that property is appreciating over 10 plus years. You're going to have that property worth a lot more down the line when it comes to selling it. And when you sell that property, you'll have that money to pay off your current primary residence and that mortgage. If this is something of interest to you and real estate investing has always kind of been at the top of your mind, but you just don't really know how to get started, and maybe you're someone that owns a property that you've been at for a while, well, definitely check out the link down below. It's to my One Property Away webinar that I've created that shows people how to tap into their equity in their home to purchase their first investment property. It essentially shows you how to pay down your mortgage in 10 years from now, while also being able to pay for your kids' tuition in college, coming out debt-free, and also retiring early. Now, I mentioned at the beginning of the video that I do have a personal opinion when it comes to paying down your mortgage as fast as possible. Well, here it is. My opinion is I don't think you should. And the reason being is, let's look at your annual mortgage rate right now. Let's say you're in between 1.5% to 3.5%. Interest rates are super low right now. So why would it make sense to pay off your mortgage with an interest rate that low? The cost of borrowing is super low when you can invest your money in, again, real estate, or if you just want to go the traditional route and think it's a safer play, then let's say you get a 5% return on your money with investing in, say, mutual funds or stocks or RSPs. Whatever you want to do with that money, I can guarantee you're going to get more of a return with those types of investments or real estate versus paying down your mortgage faster. Now, obviously, having no mortgage is not a bad thing at all. It's obviously great to have no mortgage, you have no payment there, but let's just think outside the box. Let's say we do invest your money somewhere else, you get more of a return on investment, so over the long run, you're technically making more on your money, which allows you to pay off that mortgage and then have more money to play with. That's just my general opinion on it. There's no right or wrong answer, and it does really come down to your comfort level. Now, whatever strategy you go with, just make sure you do kind of give it a general overview and make sure that you're not gonna put yourself into struggles financially. So for example, if you're going with strategy 1 and you wanna make those lump sum payments and increase your payments, just make sure you're not putting too much money towards your mortgage and not have any savings as an emergency fund. I do see some people do that from time to time. They just want to pay down their mortgage as fast as possible, but they end up putting too much money down, and in the future, they have no money in case something ends up happening, like their car breaks down. So that's one example. Or if you're going with number 3, the real estate investing route, just make sure you know what you're doing and you have a team of professionals that can help you get there. So that's it for today. I hope this video helped you guys, and I'll see you on the next one.